Hello, everybody, and welcome into Commodity Culture, where we break down commodities markets, sound money principles, and geopolitics, all with the goal of making you a better investor in the commodities sector. My name is Jesse Day. Today is December 30th, 2025, and I'm thrilled to welcome Ed Steer to the program, a precious metals expert who has been analyzing the space for over 20 years, a former contributor to Casey Research, and the founder of Ed Steer's Gold and Silver Digest. Ed thinks the parabolic run we've had in silver to close out the year is just the tip of the iceberg. Ed points out that this rally was largely driven by bullion banks covering their short position as they get decimated. But the party is just getting started. When the supply deficit hits the proverbial brick wall and prices keep climbing, the shorts are going to be annihilated in an event the late great Ted Butler referred to as the bonfire of the silver shorts. And that event will send silver prices to levels previously thought unimaginable. All of this and so much more ahead. But if you love silver, get yourself a Stack Silver, Not Fiat Commodity Culture t-shirt. Link is in the description. And now strap yourselves in for my conversation with Ed Steer. Ed Steer, it is great to have you back on Commodity Culture. What an incredible year it's been for silver here in 2025, and what a dramatic end we've had so far, with silver soaring over 10% in a single trading day on Friday of last week, only to lose most of those gains this week. Now, once again, we've got a green candle. We're at 5% or so right now on the day. $75.73 is on my screen at the moment. It's been a wild ride. I mean, just being over $70 silver by the end of this year was something that was not on a lot of people's cards. Most people I spoke to throughout the year said maybe we'll get to 50. But here we are. I'd love to get your thoughts on silver's rise so far this year and the recent roller coaster price action in the silver market.
Well, I'll tell you what, as I mentioned just before we started, you hit the record button on this. There are a lot of pieces in motion on the precious metals chessboard right now, especially in silver. I mean, before we get into this particular year in specifically, you have to look back at, the last 50 years in silver where, it's been basically managed in price along with the other precious metals. And as a result, for the last 5 or so years, we've had this increase in the structural deficit in silver, where there's far more silver being used than being mined. And there's a finite amount of silver above ground that the bullion banks are prepared to part with and then feed this deficit. And sooner or later, I mean, we're going to hit a brick wall. And we started to see signs of that this year, and with the price rising. But what I want to point out about this price rise is that the price is rising mainly because there's a lot of short covering going on in the market right now. That's what causes prices to rise. People buying new long positions are covering shorts. And what I've discovered in the bank participation report over the last 3 or 4 months since July, the U.S. bullion banks have gone from a short position of, see what it was, back in April, they were short 29,000 COMEX contracts in silver, or net short, and now they're net long 773 contracts. So they've covered 29,000 short contracts since April, and every time you cover a short contract, I mean, the price starts to rise. So it's been the covering of the short contracts by the U.S. bullion banks that has driven the price higher. And of course, other people are covering as well. As the price goes higher, their short position goes further and further underwater. And they say, before we lose too much money, we better start covering. So this thing is becoming, came close to going parabolic. Matter of fact, it was parabolic on Friday. I mean, when we saw that big rise, everybody, took a deep breath. But, what that was the beginning of Ted Butler's bonfire of the silver shorts, where all the silver short studies have been, if I don't cover now, I'm going to be in real trouble. And if they let the price run like that, the price would be heaven only knows what, and there'd be a lot of bankruptcies around. So they stepped in with a margin call increase on Friday from the CFTC. But if you carefully note the Globex Open on Sunday evening in New York, all 4 precious metals took off higher, right out of the gate. And silver was the spectacular one. It was up $4.50 in the first 10 minutes of trading. I mean, it was just basically no ask. and they were forced to step in and drive the price down because we're at the situation now where the shorts are in dire straits. So this rise is a combination of massive short covering, and also the fact that we are approaching we're now coming up on the sixth year of a supply-demand deficit, and sooner or later, this is going to hit a brick wall. And, we're in the final throes of this price management scheme in silver and all the other precious metals. And basically what we're doing is we're living through history right now.
And very interesting action in the platinum market as well, seeming to go parabolic along with silver on Friday and experiencing similar price action. Gold, obviously, we're going to get into that in a moment, but I have a follow-up there regarding the bullion banks and their long-time manipulation of the silver market and all of these short contracts. Do you think that game is completely up now? Obviously, a lot of them going long. As you mentioned, that was a big part of the driver behind the rise in price we've seen recently. Is there a world where they jump back into the bonfire and try to continue shorting silver and manipulating prices to the downside? Is there going to be an opening for them to do that? Or do you think we're reaching a stage where they're deciding this is not a game that I want to play anymore?
Well, I'll tell you what we saw on Monday was pure desperation on their part. They had to get the price down, or there were going to be a lot of trading houses that were going to have margin calls they couldn't possibly meet. I've written in my column, over the years, especially this year, that how are the shorts going to get out of this? They're still massively short the market because look, right now the open interest in silver is at around 157,000 contracts, so which means there's 157,000 long contracts and 157,000 short contracts. Those guys that are short are in a world of hurt, and there's just no way out. It's impossible to tell how this is going to turn out. The banks are basically playing a losing game here, and the U.S. banks, like I said, they're net long the market now. But the other thing to point out about the U.S. banks is their gross short position, because if you take the difference between their long position and their short position, they're long 773 contracts, which is the first time in history that the U.S. bullion banks have been net long silver. But they still have a huge gross short position of 18,000 contracts, which they have to cover. And if they do jump into the market, all they're doing is slitting their own throats, because this is a market that just cannot be stopped to the upside. Because, like I just said in answering the previous question, is that even if the deficit is only 100 million ounces this year, I mean, how long can this go on? I mean, it's impossible. And of course, China has stepped up to the bar, and we'll get into that later, I'm sure, with these new export license you need for silver. So, if the bullion banks, it's a lose-lose situation, not only for the bullion banks, but for anybody that's short the market right now. I would not want to be short silver or any other precious metal for all the tea in China. It's a losing game, and it's just a matter of how many bodies are going to float to the surface by the time this short covering rally and breathes its last, because we still have a lot of room to go to the upside yet.
Well, you mentioned before on this show that you think silver will reach prices most would find unimaginable. Obviously, all the confluence of events that we've discussed has led us to this point. You think prices are going much higher from here. Many would agree with you. The highest call I've heard for silver so far in this show is Lynette Zhang, who said that if true price discovery were to occur, silver should be worth over 1,000 US dollars an ounce. I wonder what your thoughts are there. Obviously, we're in a very hyperbolic space. People love to throw around big numbers when it comes to gold and silver. Do you think silver could eventually hit 4 digits at some point? And when you say unimaginable prices, what do you mean there?
Just try to imagine the fact that, Lynette said 4 digits. If the bullion banks and the big 8 shorts decided to turn off their computers and not do anything, okay, and not go short anybody that wanted to go long, there would be nobody to go short against to sell along to the shorts, and the shorts would have to bid the price up to some unimaginable price before somebody would prepare to go short against them. She's not wrong, but the thing is that a 4-digit silver price would bankrupt just about the entire financial system that's short silver. The U.S. bullion banks, the foreign bullion banks, they just can't allow that to happen. Even a three-digit silver price are going to put a lot of trading houses and small traders and even large financial institutions in insolvency immediately. Look what happened to Bear Stearns back in 2008. As Ted Butler pointed out way back then, the reason that Bear Stearns went under, not just because of their mortgage-backed securities and all the garbage they were holding in the real estate market, but there was a $2 billion margin call in silver and gold they could not meet, and they refused. The Fed refused to save them, so J.P. Morgan was coerced into taking over their short positions way back then. So if you can imagine if silver price, I don't even know what the silver price went to, $30 to $40 or something like that, or 40 to 45. It was like a $10 move in silver. And I don't know how much it was in gold, like 300 or 400. It was a big move, percentage-wise, and that caused $2 billion worth of margin call. Just take a look at Friday. Silver was up $7 or $8. The margin call and gold was up. How much was it? Three-digit number of some kind. The margin call that went out to all the players there would have certainly put some people in the red, in big time. And if they let the price run to say $100 or $200. I mean, the margin calls, nobody could meet them because they just don't have the cash laying around because it's money they have to put up front right away. The CME group takes it straight out of their account, and if they don't have the money there, they liquidate their position into a market that's basically no ask. So, a hyper spike in prices like that is theoretically possible, but the financial damage to the world's financial system would be just incalculable.
The sponsor of today's episode is ARC Silver Gold Osmium. Owner Ian Everard is praised even by his competitors as one of the most honest and level-headed bullion dealers in the United States. They have some great prices. You can see some of them displayed right now on screen. Take advantage of these specials today by reaching out to Ian at 307-264-9441 or by email at ian@arcsgo.com. Make sure to tell him, of course, that Commodity Culture sent you. And now, back to the interview. Well, as silver soared in that final trading day last week, Elon Musk chimed in on X and said that silver rising so quickly would be bad for all the industries that rely on it. Do you think we could see tech company CEOs like Elon and other companies that rely on silver for their products start to stack silver, keep a silver inventory on hand to hedge further upside in the price?
That's entirely possible. I mean, the fact that there's a silver shortage out there is starting to seep into the mainstream business community now. And, Elon's nobody's fool. And if he can see it, there's a lot of other people that can see it too. And he may decide to take a position in the COMEX futures market by going long, which would drive up the price. Or he could go to London and pick up some silver there and hope they have it. Okay. Or he can go buy a mining company. Okay. I mean, we are in this situation now where still, the silver users, the big ones, I think there was a silver miner was in Japan or China or whatever, bought a silver mine or something to go into production to produce silver for them. I can't remember the name of the company. But that's just the thin edge of the wedge. Once this supply-demand deficit really hits the wall, then you're going to see these big users go to any lengths to get the stuff, including, of course, drive the price higher if they can even get the physical silver. But no, it's impossible to imagine just how desperate the companies will come get their hands on it, and they're slowly coming to the realization. And this spike higher that we've been seeing for the last 2 or 3 months and ending on Friday, is just a foreshock of what's to come. I mean, the impact really hasn't hit, but Elon is absolutely right that it's not good for the users. But most users, as everybody knows, I mean, computer manufacturer, TV, or whatever, they use a fraction of an ounce in their product. Some of the products out there use more than that, but it's a small portion of the product. So if silver goes from $70 to $700. it's going to make not much difference in the price of their product. But there are products out there that use a fair amount of silver, and of course it will affect the price. But the fact of the matter is, it's not the price, it's whether or not they're going to be able to get the stuff or not. And as how this is going to unfold going forward, I don't know, but sooner or later there's going to be a mad panic.
And moving from corporations to governments, we have seen a push from the Trump administration to find domestic sources of critical minerals. Rare earths has been a big one up in the headlines. They did add silver to the critical minerals list. Do you think governments will start to take stakes in perhaps large silver miners? Obviously, we know China produces a ton of silver. The government is definitely involved there, as well as, stacking a lot of it as well. We've heard the stories that many of you have discussed about, Chinese representatives in South America buying silver concentrate. But do you think we could see that in other countries where governments start to get more actively involved as they realize how short silver supply is and how vital it is for industry and for strategic purposes?
Oh, absolutely, 100%. I said in my column a couple of days ago, I said the the change in silver, the rise in silver price, and the structural demand supply deficit in it, copper, and a bunch of other things will become a geostrategic problem for nations as a whole. And, the strategic minerals, silver being on the strategic mineral list in the U.S. is just another brick in the wall for the boys who are short the silver market. Okay. I mean, this has been building now for the last year or so. And like you said, the Chinese companies have been scouring South and Central America for all the concentrate and doré they can get their hands on. And I'm sure they have long-term contracts with several companies to ship it all to them. And like, as you know, they're going to start having an export license in a couple of days. So no, there's no question about it that when this supply-demand deficit hits, whether it be in silver or cobalt or copper or whatever it is, the governments, including the U.S. government, are going to be actively and aggressively seeking out a source of supply, whether it be buying miners themselves. I think there was a Chinese company just bought a copper deposit in South America someplace just the other day. And so, no, this process is just starting, and it's going to accelerate by a huge amount in the weeks and months ahead. There's no question about it.
Well, talk to us about those export controls coming out of China, kicking in here in a few days. As you said, what are the details of it as far as you know, and how much of an impact do you think it could have on restricting silver leaving the country?
Okay, first of all, if you want to export silver from China, you need a license. Okay, I don't know whether the miners have to get the license, or the refiners, or whoever has to get the license, or the person that wants to export it from China that's going to use it, the end user. I don't know how that exactly works, but all I know is that there's now that wall there where they can, they can approve it or disapprove it. How it's going to work, I don't know. There's just no way of telling. This thing hasn't started yet. Can they use it? Could China use it as a weapon? Absolutely. I mean, they're already using the rare earths against the United States. So, there's a chance, there's a good chance that they could be what I call, become a weapon of financial mass destruction if they choose to do so. But there's no question. I mean, the Chinese are not stupid. They know perfectly well. They know everything that you know, I know, and everybody listening to this program knows, okay? They know it all, okay? So do the Russians. So do the Indians. I mean, this is not something that a little group of us silver enthusiasts, are talking about in a vacuum. I mean, this information is being sucked up worldwide, and what we're seeing is a slow, steady response to it, which is about to go parabolic and came close to it on Friday. So, how this licensing system is going to work, A, and B, how soon they're going to use it, I have no idea. The best we can do is just sit here and watch it, blow the froth off a cold one and just watch and see how this turns out.
I love that. Now, the mainstream press hasn't really been discussing silver very much, despite the fact that it's now up around 140% year to date, obviously massively outperforming the broad market. Is it possible we're still early in this trade? I know you mentioned that prices could go parabolic from here. What signs, first of all, how early do you think we are given the lack of attention from the mainstream? And secondly, what would the signs be that you would look for that we've entered a mania phase of the silver market?
Okay, to tell you the truth, there's been a fair number of stories about silver in the mainstream press just in the last 2 or 3 weeks. So I've carried them in my column. I know that they're there, and there's far more of it now than there was 6 months ago, where there was absolutely nothing. It's amazing to see that there's any press on it at all. And like I said, it's just another brick in the wall. This thing has been building slowly, slowly, slowly over the last. I've been in this game now for 25 years, more than 25 years, and it's been slowly, 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 slowly building up. And we had a big peak in 2011, another in 2021. But this is the main event coming up right now. Okay, we are in. Let's see. Inning of a ball game. We're probably in the second inning, maybe. We've got a long way to go. The thing is that the third, fourth, and all the way up to the ninth inning could unfold very quickly. In other words, this thing could go supernova very quickly, according to Ted Butler's bonfire of the silver shorts, where he says, the shorts are going to be panicked one day, and they panicked on Friday, and only because the bullion banks and the short sellers of last resort came in and killed the rally like they did on Monday, and they're doing again today right now as we speak. They know that kept this thing from going supernova. So, this thing has a long way to go, but it could unfold very quickly when it does.
Now, I had Gary Savage on the show a few times, and he says there will come a time, and he believes it's in the next few years and potentially sooner. I believe he would say when it comes to gold and silver, we're more in the later innings, getting close to the end, but he thinks that it could go parabolic in that end phase. And he thinks at that time you want to get out of the metals completely, physical or otherwise. Now, this is in contrast to a lot of guests on my show. Gold and silver bugs tend to be, believe that gold and silver is money and that they will hold that money for as long as possible, perhaps hand it down to the next generation, and of course take some profits where it makes sense. But Gary pointed out, hey, in 1980, in 2011, if you didn't sell your whole stack of silver, for example, how long were you waiting for it to come back? An incredible amount of time. So there will come a time where it's time to get out of this trade and sell and move on to something else. Do you have a similar mentality, or are you holding on to your silver and gold for the long run, perhaps taking profits along the way? What's your strategy there?
This time, it's different. This is not 1980. I remember I lived through 1980. I bought silver at that time. I made a bunch of money, lost a bunch of money, been there, done that, but don't have the T-shirt. So I do have big recollection of that, okay? Was there and did it. The thing is, this time, it is totally different, okay? We are in a structural supply-demand deficit. The population of the world has gone from 3 billion or whatever it is people up to 11 billion people. They've suppressed the price of silver for the last 50 plus years. The thing is, this supply-demand deficit, when it does hit a wall, is not going away. It will be with us for 5, 10, 15 years. Like, $100 million ounce deficit. Think about it. The average silver mine, as Phil Baker, the CEO of Hecla Mining, says, is about 3 to 5 million ounces. And a big one would be 10. So if you had 20 small mines, where's the silver going to come from to fill this supply-demand deficit? It isn't there. It isn't in the pipeline. It hasn't been. The silver that needs to fill this deficit has yet to be discovered. Okay, I'm about 77 years old, and I will not live to see the silver market back in the supply-demand balance, okay, unless there's some sort of, restrictions put on its use. So when silver goes up this time to whatever 3-digit number it's going to be, Keith Neumeyer has been predicting 3-digit silver. He's been right. And let's say it ends up at 500, which is not unreasonable, okay? $500 for an ounce of silver. It's going to go up there and it's going to stay there. It's the new price. I have a fair amount of physical silver stashed away in a vault, and I can guarantee you I ain't going to be selling an ounce of it. Okay, it is pure, unadulterated wealth. Silver is money, gold is money, and I'll be passing it down to my daughter, and I'll sell my shares. There's where I'm going to do. I'm going to wait till this thing really soars, and then I'm going to take the money off the table, and by selling my shares, but my physical, I won't sell an ounce.
Very interesting perspective. Now, I want to go back to China for a moment because there's been a massive spread between the Western and Chinese silver markets, which recently hit as high as an $11 spread. Why is the Chinese market pricing silver so much higher? And does that price represent a more accurate picture of the silver price in your view?
Well, it's just supply and demand. I mean, they don't have a paper market in China. It's all physical. The drain out of the Shanghai Futures Exchange and Shanghai Gold Exchange is just absolutely enormous. There was 1.3 million taken out of the Shanghai Futures Exchange today, and there was another million yesterday. So what they're doing is they're trading physical silver, and it's, they just can't refine it from good delivery form into retail form fast enough. And so therefore the demand is there, so the price goes up. It's as simple as that. There's more demand than there is supply. And the other thing that's happened, and it was in my column this morning, is that the difference between the U.S. silver price and the Chinese silver price is 13%, over 13% yesterday. It's been going up steadily for the last 4 days in a row. And it's only a matter of time before, the paper price catches up. But when you've got the short sellers of last resort, not-for-profit sellers, the big H shorts, whatever you want to call these commercial traders out there, the banks and investment houses that are desperately trying to keep the price down, as long as they're in charge, okay, and they're losing control, it's obvious. I mean, just take a look at the chart. These are desperate times for them. But as long as they're controlling the paper price, we're not going to know what the true price of silver is, and that's through all of recorded history up until now. We have never known what that is, but I guarantee you, before this is all over, we're going to find out.
Now, I want to talk about the silver miners for a moment because, interestingly, they have, generally speaking, been providing leverage on the silver price. That has all started to change as of right now. I said silver was up around 140% year to date. It's actually 158% as we speak. The SIL ETF year to date is only 159%, just a single percentage point over the price of physical silver. This is a phenomenon that has just started to unfold recently. It seems like the miners have not yet caught up to this massive parabolic, or I don't know, some might call it parabolic at this point, but this very rapid rise in the silver price. Do you think there's that gap's going to close here? Because shouldn't the price of silver miners, particularly the ones producing, go up much more considering how much more valuable the product they're producing is?
Okay. This is something that I've been talking about in my column for the last year, okay? And I have the charts in it every Saturday. I have the chart right in front of me right now. I've got my calculator out. Right now, the Huey, the gold stocks are outperforming the underlying precious metal, gold itself, by 2.35 times, okay? And as you correctly pointed out, okay, the silver shares are just absolutely terrible performance this year. And I'll just tell you what the math is on that right now. They are up 1.14 times the price of silver. That they should be double the price they are now to equal the price of where the gold shares are versus the gold price. So if you take a look at, I don't know, First Majestic Silver, which is selling for, I don't know what it's selling for, $18 or $17. That should be a $35 or $36 stock right now, if not more. Should be up around $40, and the gold stocks should be selling for about 25 to 30% more than they are right now. So the equities are horribly lagging, especially the silver equities. And I've been moaning about that all year long, and it's just horrible to watch. Like month to date, right now, silver a month to date as of yesterday was up 27%. Okay, silver stocks are up 11%. Okay, gold is up 2.7% this month, and the silver stocks are up 4%. So, the gold stocks haven't been setting the world on fire, but, I mean, the silver price itself is outperforming the silver stocks by 3 to 1. I mean, this is unheard of before. And I've been, like I said, I've been pissing and moaning about this all year long, and I don't know when it's going to change. I have the impression, and I've said it several times, especially in the last month or so, that there's somebody out there definitely suppressing the price. If you take a look at the silver stocks, they were way up in the futures market, like they were yesterday, Friday, and all last week, and only to get hammered the moment that the equity markets open at 9:30. That's what happened this morning. So they had to dig themselves out of a huge hole there's somebody in there that was, let's say, that bought all the silver stocks that were being sold on Friday in a or Monday in a panic, and we're selling them into the market today to suppress the price. It's my opinion that the silver equities are being actively managed right now. But that, like the silver price, one of these days that's going to change. But it hasn't changed all year. But if you're looking for, cheap stocks, the silver stocks are the bargain of the century right now.
And so when approaching the silver mining space, let's say you didn't have a stake in it today, would you be just looking more towards the big names, the producers, your Pan American Silvers, et cetera, those type of names? Would you be a bit more willing to expose yourself to risk? I mean, I guess this is a combination of what your personal approach is and what you think somebody who's new to the space maybe should approach it. We don't give investment advice here, but I'd just love to get your thoughts on where you're seeing the most value in the silver mining sector at present.
Okay, I'm not an investment advisor, okay? And most people listening to this show are already loaded up on silver stocks and gold stocks, et cetera. But if you're new, okay, we're preaching to the choir here, okay? The thing is this, I've been buying silver. I remember buying First Majestic silver for like about $3 and Pan American for about $4. And I bought Wheaton Precious Metals when it was 95 cents, okay?
Wow.
Okay, I mean, this is way back, like 20 years ago. The thing is that today is different. I recommend anybody, if I had to do it all over again, okay, I would just have bought SILJ in the US, okay? And here in Canada, 9 Point Silver Equities Fund, which is a Canadian silver equities fund that's also available in the US. But I would have bought a general equity fund and just forgot about it, because if you're a newbie in this business, even if you've been around a while, it's not a good idea to rifle shoot a sector like this, which is so highly volatile. You mean Hecla, Coeur d'Alene? I own Hecla, Coeur d'Alene, Pan American Silver, First Majestic Silver, and about 20 other silver stocks, some juniors and some exploration companies and stuff like that. But I've been around this business for a while. But if you're a newbie, and even if you're not a newbie, I mean, you could sleep perfectly well at night buying a general purpose silver equity fund, like I said, SILJ, or here in Canada or in the US, you can get 9 Point Silver Equities. Put your money in there and sleep tight at night. But like I said, unless you know this market, I wouldn't be buying a single stock.
Yeah, I love that approach. That's actually my approach. I've only been in this game for around 5 years. I stick to the SILJ, Wheaton Precious Metals, and the GDXJ, and I just kind of set it and forget it when it comes to my equity exposure outside the physical metals. I think, speculating on single stocks when it comes to the mining business, like you said, you got to have a lot of experience and knowledge and understand how to evaluate these companies. Ed, this has been a fantastic conversation as always. Tell us about Ed Steer's Gold and Silver Digest.
I'll tell you what. I'm really not looking for new subscribers.
Okay.
As this market has taken off in the last 6 months, I mean, I've just been overwhelmed. But if they want to look me up, just Google my name, Ed Steer, Gold and Silver, and my website will pop up. There's a tab on there where you can click on it to get a free sample column, and you can read. That's the kind of information I give, which is very fact-based. Okay, there's none of this wild-ass speculation that you see in the lunatic fringe area. It's all fact-based stuff. And I spent 15 years learning at the knee of the greatest silver analyst there was, silver analyst Ted Butler, and I'm his emissary and his disciple. And everything I learned about the silver market, I learned from him, and I'm just trying to pass it along now that he's passed from our site.
Fantastic. Amazing mission. You're one of the most knowledgeable people in the space. Always love chatting with you. I'm going to put a link in the description below to your subscription service. Even though you're not looking for new subscribers, maybe we'll get a few extra here. And I'm looking forward to circling back at some point in 2026 and continuing the conversation.
Okay. Thanks very much, and Happy New Year to you and to all your listeners.
Thank you for joining us today. Our sponsor, ARC Silver Gold Osmium, has some great prices on gold and silver bullion products. They are on your screen right now. These are subject to change and while supplies last. So reach out to owner Ian Everard today at 307-264-9441 or by email at ian@arcsgo.com, and make sure to tell him that Commodity Culture sent you, and pick up your Stack Silver Not Fiat t-shirt available exclusively in the Commodity Culture shop and backed by a 100% quality guarantee. Link is in the description, and I'll see you guys in the next episode. Commodity Culture is a series on commodities and natural resources. If you would like to see more, be sure to subscribe and hit the bell notification so you're always up to date with the latest episodes.